Asian shipping stocks tumble as US dock workers reach an unexpectedly early deal to end strike. UK home sales surge, bolstering market confidence amid new government mortgage policies. Meanwhile, the French government plans to cut $66 billion in spending and increase taxes to tackle its budget deficit. Hello, I'm Toba Aydin with the latest business and finance news here on TRT World. Shares in shipping companies fell heavily across Asia on Friday as US dock workers agreed on a deal to end a strike on the East and Gulf coasts far sooner than expected. The move ends a strike that had snarled East Coast and Gulf Coast ports since the beginning of the week and threatened US supply of fruits, automobiles and other goods. Wages will increase 61.5% over 6 years under the tentative agreement, but a central conflict over port automation is still under negotiation. Evergreen Marine, Wanhai Lines and Yangming Marine in Taiwan fell between 8.8% and 10% in their heaviest drops for several months. Meanwhile, Japanese shippers Nippon Yusen, Kawasaki Kisan and Mitsui OSK Lines logged drops between 7 and 9%, the largest decliners on the Topix index. For more, let's bring in Wael Mukarram in Dubai. He's financial market strategist lead at XNES. Good to have you with us, Wael. Firstly, why has this deal led to a decline in shipping companies across Asia?
Good morning. Two key points, and I believe you mentioned them in your start. Like one of them, of course, adding costs to you just in order to increase wages to get things back to normal. This is a big point, especially that it's not like a small increase. It's almost a 62% increase. So this is like we're almost, let's say, close to somehow doubling the costs on labor. Another point is automation, because we all know that the secret of increasing profit margins has been automation and will still be automation in the future. So abandoning any automation plans for these shipping companies would, of course, put direct and indirect costs, push them higher. And this is, of course, would just like put investors in a way that they're a bit tricky about the future of profit margins of these companies.
Right, and investors had been hopeful for a temporary rebound in freight charges, which have been in a downward trend recently. Can we expect to see this continue?
I believe yes. If we look at the trends since the beginning of the year between, let's say, Asia and the States, has been on the rise. We've seen, of course, historic numbers during COVID, and then things dropped when life got back to normal. However, such strikes would just remember us on how vital supply chains are and how fast things can go bad because of these disruptions, which could lead to direct costs, which could lead to increase in warehousing, shipping, labor, and all that. So by that, of course, this will come into play where these shipping companies will push users or consumers to bear the cost. And unfortunately, this will fuel costs across all the circle. It's going to be to consumers, to shippers, to manufacturers. So everyone will bear a part of this cost.
Now, this is just a tentative agreement until January. How will concerns over port automation be addressed?
Actually, when we look at port automations, I believe because this is going to be a bit tricky, no one of these companies wants to drop automation because really it could bring drastic changes to profit margins. And I believe this is a non-ending debate that's going to take a long time, and it really needs proper closure in terms for things to go back to normal. We don't see this only in shipping. We've been seeing this in many sectors where there's a fight between the old way of doing things and the automation, and how automation is taking place of a lot of employees and how it's driving like unemployment higher. We hope that at a time, of course, that things could get better, because if it doesn't, we're going to be seeing a lot of strikes later on, and these strikes would lead to another spike in freight costs, and these freight costs will fuel inflation. And if we fuel inflation between top economies, this is going to be also spilling over to the rest of the world.
Right, Wael Mukarram, interesting analysis there. Thank you very much for joining us.
Thank you so much.
Now a quick look at some of the other top business stories from around the world. Donald Trump has said he would block any state from banning gas-powered cars if elected as US president. Trump opposes electric vehicle tax credits and wants to prioritize gas guzzlers. But President Joe Biden, who supports EVs with tax credits, has not set a gas car phase-out date. The state of California plans to ban new gas-only cars by 2035 with support from other states. Spirit Airlines is discussing bankruptcy with bank holders after a failed merger with JetBlue. But the low-cost airline might restructure its finances through an out-of-court deal. Spirit CEO highlighted ongoing debt talks aiming for a swift solution. Meanwhile, the company had scrapped a $3.8 billion merger with JetBlue due to anti-competition concerns. It faces financial challenges with losses and significant debt as competition in the low-cost market intensifies. Brazilian energy giant Petrobras has announced 2 major gas discoveries in Colombia that could double the South American country's known reserves. The discovery is the largest since the 1990s and comes as the worst drought in decades crippled hydropower supplies in the country. According to industry figures, natural gas accounts for up to 30% of national energy consumption. And Meta CEO Mark Zuckerberg has surpassed Jeff Bezos to become the world's second richest person for the first time. According to the Bloomberg Billionaires Index, his net worth surged by $78 billion this year to top $206 billion as an AI-fueled rally sent Meta shares to record highs. The 40-year-old Facebook co-founder now trails Tesla CEO Elon Musk by roughly $50 billion. The UK housing market is showing signs of a resurgence as lower mortgage rates spark sales and inquiries. The latest data points to renewed confidence among home hunters and a notable shift in the property landscape, with regional price growth and falling borrowing costs fueling activity. Home sales jumped 25% year-on-year in the 4 weeks to September 22nd, marking the fastest pace of growth since 2021. Buyer inquiries also rose by 26%, driven by households that had delayed moving decisions for the past 2 years. Major home builders saw a 2.1% rise in stock prices as confidence returns to the market. Average mortgage rates have fallen to 4.57% for a 5-year fixed term, down from 5.53% last year. Some fixed rates have dipped as low as 3.7%, offering much-needed relief for potential homeowners. The Bank of England's interest rate cuts are boosting mortgage approvals, now at their highest in 2 years. Throughout the region, Northern Ireland led house price growth at 8.6%, followed by Scotland at 4.3%, and London saw a 2% growth but remains the strongest performing southern region. Anticipation of upcoming tax changes is prompting landlords to sell, creating more supply and potentially keeping prices in check. Let's get more on this now with Vicky Price in London. She's a board member at the Centre for Economics and Business Research. Good to see you, Vicky. Now, how have lower mortgage rates contributed to the recent surge in home sales across the UK?
It's been very helpful. The interesting thing is that the central bank rate has only come down marginally by, the Bank of England, which has really, a long way to go before it meets the expectations of the market. That rates will come down quite fast. It's been slightly hawkish and very careful about this, but the markets have decided nevertheless that rates are coming down, and long-term rates for borrowers have, as a result, declined quite considerably. And indeed, you're quite right in your summary. We've seen mortgage rates, fixed rates for 2 years, 5 years, come down. There are now, of course, also longer term rates available, so people can lock into those rates for longer periods, and some people are going for that. People are feeling slightly more confident in that area, although they're not feeling particularly confident for the economy as a whole. But they have seen, in addition to the cuts in rates, which are very, very significant for homeowners, also real wages going up. For the last year, month after month, wages have risen faster than inflation. Now that of course, has given a boost to household incomes, despite the fact that taxes had been rising quite significantly in the UK until quite recently. So we've seen, therefore, an increased willingness to spend a certain amount of that extra income into keeping their mortgage repayments, or even getting a new home. And I think that has been reflected in the demand that we are now seeing. There's been a renewed confidence in the housing market. And also in terms of the government intentions, they are supporting, or they will be supporting, the house building sector, because of course they have reintroduced targets that have to be met for housing by councils, and that in many ways will also ease the availability of housing, but that's going to take a little bit of time to come. So in the meantime, house prices are going up, as you rightly said.
And do you see this trend continuing until the end of the year and throughout 2025?
Yes, I think the expectations are that house prices are going to be going up, possibly by 2.5% overall. Yes, there are differences in different parts of the UK, but there are also some places where prices are still quite low and rising only sort of gradually. There are going to be various incentives. Also, quite likely, we're going to hear a little bit more in the budget of October the 30th, and that is quite likely, therefore, to boost in some ways also first-time buyers' accessibility to funding. Which is very, very important part of the market. So I think if that were to happen, then that house price rise that we have seen already is quite likely to continue for some time. So what happens next is that interest rates will be coming down by the central bank more aggressively. We've already heard the head of the Bank of England say something like that just the last 24 hours. So the markets are anticipating that perhaps there will be even a further boost to demand for housing in the coming months.
All right, Vicky Price, we will have to leave it there. Vicky Price, board member at the Centre for Economics and Business Research. Thank you very much, as always.
Thank you.
France is under pressure to control its budget deficit. The government plans to introduce new taxes on big businesses to help manage public finances. President Emmanuel Macron has always supported business-friendly policies, but with the economy struggling and political uncertainty growing, France faces tough choices on taxes and spending cuts. The French government is set to cut $66 billion from its budget and raise taxes to fix its growing deficit. About $24 billion will come from higher taxes on big companies and the wealthy. France's deficit is currently 6.1% of its GDP, and the government aims to reduce it to 5% by next year. President Macron supports a temporary tax on the biggest companies in France. If approved, the corporate tax rate could be raised by 8.5% to 33.5%. Macron says the levy is necessary to boost France's finances, but should only last 1 year. Major companies like Total Energies will be affected, though many have already planned for higher taxes. France's financial challenges are forcing investors to sell French assets. They're now demanding higher returns on French government debt. The French stock market has fallen more than many others in Europe.
Because that, I think, having an exceptional taxation on corporate is something which is well understood by large companies, if this is for 1 year, given the level of effort which should be made, but it should be limited.
For more, I'm joined by Jacques Rolland in Paris. He's a senior research fellow at the Global Policy Institute. Good to have you on the programme, Jacques. Now, how will Macron's temporary tax on large companies impact France's economic growth?
The impact on economic growth is not meant to be very strong. Actually, you said Macron's cuts a rise in taxes. It's more the government. Barnier's prime minister, the one who is conducting the policy, is the prime minister. Macron has to back it. But yes, there don't seem to be too many fears about how it will impact business activity. The cuts overall, the main concerns is maybe the fact that this 60 billion euros cuts and tax hikes next year could have an impact, but it's more to do not so much with the rise in taxes for companies who have made big profit, or it only affects companies with a turnover of more than 1 billion euros a year. So it spares most of the French companies will not be affected by the tax hike. The main concern is the fact that cuts could have an impact on consumption, which is on household consumption, which is the main driver of the French economy.
Right, and with France's debt challenges mounting, is this just a short-term fix, or will more drastic measures be needed?
It is, at the moment, it's a short-term fix with a clear aim is to try to bring down the French deficit, which is much higher than expected at 6.1% this year, and to bring it down to 5%, to aim for 3%. Before, the aim was to bring the deficit down to 3% in 2027. Now it's been postponed back to 2029 because France is in a very precarious position regarding his fiscal balance. We know we have a big debt, which is only 2 countries in the Eurozone have a higher debt than France. France has a debt of 112%, which will be rising to 150% of its GDP. So that is a big concern. But at the same time, and we've seen the impact, the main impact of that is that now the markets are asking for higher returns on the money they lend to the French government. And the spread now, France borrows at a higher cost than Spain, Portugal, and Greece, and the spread between interest rates, 5-year interest rates in Germany and France is about 1%. But I don't think there's a reason to panic for 2 reasons. The French is not on the verge. France is not on the verge of bankruptcy. France has this amazing private savings. The savings ratio in France is 17.2%, which is one of the highest in the world. And at the same time, France has a very efficient tax system, which can bring quickly money into the state coffers. So no danger of bankruptcy, but at the same time, it will be hard times. The money will cost, it will be hard to borrow, and there will be an impact on the French budget. The repayment of the debt will now amount to 50 to 60 billion euros a year, which make it the second biggest item in the French budget after education.
Okay, Jacques Rolland, we will have to leave it there. Thank you very much for joining us.
Thank you.
For many kids and grown-up kids, Turkey's Teknofest is one of the highlights of the year. It's the world's largest aerospace, aviation and technology festival. And there are plenty of games, activities and competitions, including riding in simulators and building vertical landing rockets. TRT World's Ilyas Avcı is having the time of his life in Adana on the festival's second day.
Teknofest, the world's largest aerospace, aviation and technology festival, has opened its doors for the 10th time this year, and this time in Adana in southern Turkey.
Saygıdeğer misafirler, distinguished guests, esteemed stakeholders, valued members of the press, and dear young people who will become the protectors of an independent Turkey and the architects of a just world, I am deeply honored to welcome you to Teknofest Mediterranean, a key milestone in Turkey's technological journey. here in Adana.
Adana'nın bereketli topraklarında.
Teknofest is the world's largest aerospace, aviation, and technology festival. This year, it brings its thrilling shows, activities, and competitions to Adana in South Turkey. And this edition is called the Champions League and brings together past winners to compete in fresh challenges. This year, there are competitions in 50 main categories, and they vary from vertical landing, rocket building, and financial technologies to bioengineering innovations.
The main goal of Teknofest is for students to be involved in the work in a fun way, like developing rockets, rather than through game-like methods, and for them to start at a young age. This is one of the most important steps for the future of our country. The fact that people of all ages, young and old, can see these achievements adds a special hope and a unique flavor to this field of technology.
Youth from all ages come together once again to take part in these challenges.
In Teknofest, there's lots of different projects and they are absolutely amazing. We are able to see the projects and maybe think on them, give opinion to make better on them or make better yours. And there's lots of also performance over there and it's absolutely amazing.
With highlights including the first public flights of Baykar's Bayraktar TB3 and TAI's Anka 3, Teknofest promises 3 more days of thrilling technology and innovation. İlyas Avcı, TRT World, Adana.
The ongoing devastating floods in West and Central African countries has so far claimed more than 1,500 lives, affected 4 million people and displaced more than 1.2 million people. Fears of waterborne diseases are also mounting. The European Union has already released $6 million in response to floods in 6 West and Central African countries. Brenda Radido has the story.
Countries in West and Central Africa continue to bear the brunt of flooding that has hit the region for some time now. Floods have turned into gushing rivers. Roads and homes have not been spared either across Mali's capital, Bamako. Those who cannot afford to leave their homes and business premises have been forced to live in flooded areas.
We need a certain level of flooding to be able to fish, and today that level has been exceeded. As a result, we can no longer fish. The houses have been spared, not to mention the women's kitchens. It's impossible to navigate between the streets.
The Malian government has also postponed the start of the school year after severe flooding.
You can see the images for yourself. There's so much damage. You see the water broke the wall. The wall is broken. Then the classrooms were filled, more than 15 of them. And that's not all. The management offices were flooded because the water rose up to a meter, so the papers got wet.
Mali hasn't had a flood of this magnitude for close to 50 years. The government has already declared a state of emergency after weeks of floods that led to the displacement of thousands, with more than half of those displaced being children. The torrential rainfall in the West and Central Africa has killed thousands of people and displaced millions across the region, as well as Guinea, according to the International Organization for Migration. In West Africa, flooding has displaced 950,000 people. In Chad, 1.7 million people have been affected by floods since July, and 503 people have been killed. 700,000 people have been left homeless and 273 people have died since the rainy season started in June, according to Niger's government. More than 180,000 people have been affected by floods in Mali. Scientists have warned that the climate crisis driven by man-made fossil fuel emissions is increasing the likelihood, intensity, and length of extreme weather events such as torrential rains, with Africa suffering disproportionately. Brenda Radido, TRT World.
Well, that's all your business news for now. Thanks for watching.